Good morning everybody, it's Chris here from Serene Education with the 4 majors and this update for the 27th of July. It's going to be looking at the 4 majors this morning, starting with the Euro against US dollar. Look at the daily time frame. Yesterday's up candle after this little squeeze pattern, this flag formation, has seen prices rallying higher, and it's taken us now or near about the 1450-500 mark where we had a prior resistance level or ceiling level. Price has been, we've got 2 other ceiling levels above that, and we've also got this intermediate trend lower which prices happen to break through. Now we're having a slight pullback between the high of the 1450-500 and this intermediate trend down. So we could see, if you look at possibly a 23.6 or 38.2 fib retracement area before we see further extensions higher. Notice that we have had a higher swing since, so the intermediate trend, if you want to look at the shorter term time frame, you can see the swing high. So thereabouts. If you look at the daily wick, if you took that on the 1400 or 1455, you're probably looking at 38.2-ish as our target for intraday, roughly around the 1447 mark for this pair. If you look at the 4-hour chart, for example, you'll notice the upswing here, and because we're having higher swings, you can see the dictation after the break of yesterday, the break on the 21st, slight hesitation, then consolidation to the upside. Notice, however, that the ceiling level, our swing highs are getting smaller as we've gone higher, as we've reached that 1450-500 mark, which is not too far off from here. Is the prior swing. We've seen a slight consolidation and movement. We haven't got any of this higher movement. We've got movement to the upside, however, very stagnated. So ideally we could look at potentially a pullback of some sort, and if you look at that, we're looking at roughly the 38.2%, which will bring us back to this intermediate uptrend. Put that in there so you guys can see it. So this is the intermediate uptrend against the trend down. US dollar is losing strength against euro. Definitely have ceiling level here. It needs to punch through that, but we've got this trend line to the upside, as well as the resistance above us, and you can see price. You've got a lot of momentum on the upper end of the wick, but this is a ceiling level, so we could see that as falling over. And sure enough, this morning on the 4-hour chart, we've seen a lot of selling to the downside. But are we going to see price now bounce at 23.6 or a break below that level there? Would definitely see 38.2 fib being our next potential target intraday. It needs to break above this level here at 1453 100 to be even classified or even considered as bullish, but then we have that resistance level at 1450-500, so it's not too far off in terms of momentum. So we could see consolidation occurring for the latter part of this morning. Next pair is sterling against US dollar. Here again, you could see that sterling has had an indifferent Asian market trading session. Notice that we have had higher swings, and we've seen movement on those up movements. And what we've seen is a projection higher, and you can see the intermediate trend lower. We saw a break just recently, and some nice gains since then. And you can see we've had great upside movements. Ceiling levels are progressive. You can see beautiful moves of each. If you had to take a projection of each of these moves here, you can see that the extensions 100% is the next initial target for this pair of this initial move here. You can see the pullback and the continuation, and we are now trading slightly higher than the close of yesterday. Ideally, when you want to stay above that area, so the 16,400 mark would be our support if you to see further extensions higher. Notice we are trading above a prior swing resistance level here, this area here. We have got a prior one over here that price has just pulled back from, so this could be a consolidation band. If you look at the 4-hour, for example, which will give us a good indication of that, you'll notice that higher swings dictates price moving to the upside, which is fantastic. Those movements higher have been very strong. You can see the movements, and you can see the price is pulling back now as we speak, roughly around the 1645 mark as we hit those areas. But you'll notice that the momentum now, the highs on the 4-hour, are getting lower, but we're getting the squeeze pattern going into this ceiling area. So here again, we definitely need to see a break and close higher than 1645 to give us confirmation of further upside movement. As we headed towards the area here, you can see that the highs have started to get slower, or we're getting squeezed between these two bands to the upside. So ideally a break and close higher than 1645 on a 4-hour would dictate further confirmation of further upswings, because the CTC is in our favor. However, we won't be trading any longs until such time as that's happened, because you can see over the past 16 hours or 12 hours in particular, we've had a bullish up candle, indecision, and this past 4-hour candle is just a bearish. So we're looking at a shoot or even an evening star pattern here, which is bodes for further shorting opportunities in the market. This happening roughly around a prior resistance level. If that stacks up when you get to this candle closes lower than the prior up bar, this was a clear indication of weakness or a decision to look for potentially shorting opportunities. And if that's the case, then what we could be doing is be looking for, if you take the progression higher, 23.6% would be the 1640 mark, 38.2 fib would take us back to thereabouts, or the 50% of the major, or the intraday major uptrend. Next one up is the US dollar against the Swiss franc. You can see that price is still dictating to the downside, primarily because we're still in a very much a negative downtrend. Moving average well above price action, and the CTC is well extended to the downside. Bar a couple of days where we've seen this, but still trading below the line. You can see price posting lower swings as we've seen breakouts and consolidation ranges along the board for this pair. And you can see price support and resistance levels here. Beautiful trend trading to the downside. Fantastic. This is what you exactly want to see in long-term trading, is these breakouts, continuations, pullbacks. And you can see as we speak now, price has broken through a prior support area here, and we've seen price move to the low side. Price action slightly stalled as we've moved, but nonetheless we've seen price falling lower, and you can see that the momentum now for this pair, we've seen lower swings, is in this direction here. So intraday we should still be looking for possible movement to the downside, as long this depends as the longer it takes for the US to thrash out some sort of deal for their budget, their debt issues. I think we're going to start seeing a lot more investing in the Swiss franc and the US dollar falling ground. This is going to be the same. It'll also reflect quite noticeably on the US dollar Japanese yen. So the US chief and the US yen, the longer it takes for the US government to come up with a plan to try and cutting their debt issues or raising the debt, then we're going to see further progressions to the downside for this pair. So if we look at a 4-hour, for example, you see the momentum has been lower. You can see the breakouts, the prior breakouts and pullbacks along the way for this pair here, but you can see the momentum, moving averages, everything all above, and we had a previous support area roughly around the 810 mark, which we broke straight through, slight pullback and a continuation lower. So look for further downside movement. Just be aware though that we have had a slight consolidating. In fact, now you can see the price isn't really any lower than that, and even though we've had, so it's got to break definitely lower than this area here, this trend line, to dictate that we're going to see further, because you can see now the price is being squeezed now between 2 points at this level here. So we need a nice juicy bearish engulfing consolidation and continuation, or we're going to see potential bounce at the higher. So just keep that in mind. But as things stand now, you need to see a nice bearish engulfing candle to definitely confirm that we're seeing further progressions lower. Last pair of the day is the US dollar against Japanese yen. You can see on a daily time frame, price has broken through a very strong support area, roughly in the 80. Psychologically, the 80 was a strong support area for this pair. If I just zoom out, you'll see exactly what I mean. So if we zoom out of this price, you can see price has been on the downside since May of last year, and you can see since September of last year till present date, you can see price has been trading in this squeeze. I'm just going to make this nice and thick so you guys can see exactly what it is that I see. Notice the highs getting lower in this band. Bar the intervention that broke out but failed to stack up, and we saw price revert to the downside. But you'll notice that we haven't closed, well, this intervention here. Bar this, we've seen support in the forthcoming months, and then we had a bearish engulfing pattern followed by a couple of days of spinning tops and indecision dojis as we formed a slight consolidation wedge, and then we saw price break that, and we've seen continuations lower. So daily, as it seems now, is still looking for further shorting opportunities. Roughly the 77 area would be our next target. We've been there before, so there's no reason why we shouldn't be going to that area now. And if you look at price movements, if you take the high, the previous high here at the start of this selling, if you look at the projection of that, so if you take that as the start, this is the consolidation, so back to here and then back to this bearish candle here, you can see that the 50% line has just been breached on the 4-hour, sorry, the daily, and the 61.8 would be our next target at 77.50, and then 100 would take us roughly down to past the 76.30 mark. So there's still lots more to see in this if price continues to the downside for this pair. And the longer it takes for the US dollar to actually thrash out a deal to try and sort out their debt issue, whether to raise it or to start implementing some serious cutbacks in order to try and eat away at that $14 trillion ceiling, then we're going to still see the US dollar tanking against the end. You look at the 4-hour chart, for example, you can see that movement very stagnated, but still trading below all the moving averages and still heading lower. And this is going to continue to be the case until we see any sign of progression with talks with the US government. So as things stand now, the next potential target, if you look at our daily chart, would ideally be the 77.50 mark if price can close lower on the daily at the 61.8 fib mark. That's it, guys. Hope you have a fantastic trading day. Please ensure if you're using the CTC to follow the rules of it. You've got to have everything stacking up. Make sure you follow that up with strong money management rules, and just make sure that you look at support and previous resistance lines and trend lines to give you a better understanding of what price is likely to do going forward. Otherwise, have a fantastic trading day and trade serenely.